Hi there, traders. This is Brad Gibble with the FX Market Insight for Thursday, the 16th of July. All right, now as we come into the Asian session, the US equities slightly up, no major change. But one thing that is getting a lot of airtime, and that is on the news. It's giving the dollar a bit of a push to the downside, but not massive, but a soft touch. And that's all the talk of a coronavirus vaccine, right? If you go through all the various news articles here, you'll come into where not long ago they were just talking about vaccine. The potential for a vaccine is obviously positive. The dollar's been the benefit of a bit of a safe haven. I don't think so of late, but that's the way they're looking at it. And that's where we are now. Chinese data has just come out not long ago, and it grew, but what we're seeing is a bit of weakness in the market. I think the market might have been expecting, much stronger numbers. All right, now let me just come back to the dollar page because there's a few sort of weird things that you need to really connect with. What page am I on there? That one there. Okay, so just having a look at the where the dollar index is. I mean, it is going down, but this is not easy price action by any stretch. So what that tells me, smaller trade size, bigger stop loss, keeps you in the game. You're still making money. It's not as much as you usually probably would, but you still stay in it. Now, the dollar has been drifting lower. You can see these little sort of drives down 20, 30 pips on the index, and then it sort of retraces. So you really want to be focusing on those resistance lines to get into the trade. You can see over here, $1 sort of jumping to the top side on those sort of stronger Chinese numbers. Now, let me just come down and just give you a look at those. The GDP, it's a lot stronger, 3.2, 2.5 expected. There's a bunch of other numbers in there as well. Retail sales were down 1.8%. That tells you that no one's buying anything. You've got to take these numbers with a grain of salt as well because it's the government that's actually really producing these. Now, whilst I'm there, just on this, there was a little bit of, there's some big numbers coming out. No major impact. If anything, the Aussie and Kiwi are lower with that move in the yuan. Kiwi CPI, as expected, pretty crap numbers, but that's obviously part of the course at the moment. Aussie employment figures came out as well. A really good employment number. Yeah, the rate's at 7.4%, but that's what was expected. If anything, I would have thought that number would have gone up a little bit. I know the full-time number takes a bit of a tarnish off it. With the full-time employment, a lot more structured, superannuation, holiday pay, all this sort of stuff. So it's more respected. Obviously, part-time numbers through the roof. So, and that's as those lockdowns roll back. Obviously, businesses are just getting casual staff and getting things moving there. So, once again, it's good to look at the numbers and see if they are really impacting because we've got a bunch of more things to come out. And I'll come back to that in a second. But let's just have a look at the charts. Now, I've left the charts as they were, okay? And what I want to show you is just check out the pretty horrible price action around the trend lines at the moment, right? This is as problematic as a trader when you're sticking to a trade plan, having currencies that are whipping up down through trend lines. It's hard, right? Because you're looking for a move topside, you get stopped out. You're looking for a move downside, you get stopped out. You're looking for a range-bound trade, you're getting stopped out on those moves as well. It's pretty tricky. If anything, right, looking at all the pairs here, the euro is the one pair that is showing a consistent move to the top side. Like, imagine trying to stay in sterling here where it falls from 126.40 down to 124.80, back up to 126.40. Now, no one's got deep pockets like that, right? So that's actually very tricky. You look at dollar CAD now. We did have the Bank of Canada meeting. They basically restated their commitment to the market. I think 0.25% is as low as they want to go on interest rates. They did put a big question mark over the US outlook, right? US growth outlook. So that reinforcement and confidence, I guess, in the market. Oil jumped a couple of bucks as well, and that's seen dollar CAD move to the downside. Now, that's a big flush out from a couple of days ago where it was up here and it had broken through hourly and daily resistance. Once again, one of those false moves. And it's primarily because we don't have the key momentum like indicators which are the macroeconomic data numbers, to come in and give us the answers to where these things are going. If anything, it's coming out of the geopolitical news. So going forward from here, I just want to bring you back to just to keep an eye on these things. We've got some UK employment numbers coming out, the claim account change, right? Employment change, average earnings. It's going to be interesting, but I don't know if that's going to really come into play. Sterling is moving around a lot, so you want to bear that in mind. But more importantly, the ECB, right? So the ECB interest rate meeting, they'll come out with a press conference, tell you what they're going to do. I think it's going to be like the Fed, the RBA, the Bank of Canada yesterday, in the fact that they will probably come out and just say, look, we're committed to the market. We'll do whatever we can, which seems like they've already done that 100 times, but reinforce that. And you know what? They may surprise with more stimulus. I don't think they've got any cash in their pockets. So I don't know if that's going to happen, but keep an eye on that. It is going to be important for the euro. And as I just mentioned, euro is the best pair at the moment, right? It's got the best structure. So you want to be keeping a close eye on this. I mean, I don't know if there's any negatives. It's very hard to read into the statements and press conferences at the moment what is actually negative and what is positive, right? If they come out and said, look, you know what, we've done our best, it's horrible, I don't know what's going to happen, well, then euro obviously collapses. But outside of that, it's very ambiguous, the statement. So just bear that in mind as you go through that next trading event. You want to keep a close eye on it. If anything, go through euro and the euro crosses and really start to piece together where that best trading opportunity is. All right. That's probably the best thing you can do at this point. Okay. So right now, as the potential for a vaccine comes into play, I should say, it does seem to be putting a little bit of downward pressure on the dollar. But you know what? The US is sort of isolated at the moment as far as their economy. It's at a different stage to everyone else. It's a bigger problem. And they've got more coronaviruses than anyone else, I think, at this stage. So anyway, it's going to be interesting to see how the dollar reacts. But just looking at the price action, it's down, two steps down, one step up, so to speak. So just make sure, in my view, a smaller trade size with a big stop loss gets you into the trade and allows you to start building a position. In saying that, I wouldn't be keeping the positions for longer than probably a day at the moment because they are flicking around. All right, that's pretty much it. As you can see, the dollar yuan still reacting to the top side. It's like trading Bitcoins, right? There's no news there. We've got strong data. It should probably be going down, but it's not. So that's a bit too hard for my liking. All right, guys, have a good one and all the very best for your trading today. Cheerio.